Microsoft just added over $200 billion in value in a single morning. That single move erased yesterday's massive market sell-off. Big tech is splitting directly down the middle right now. Some companies are printing record cash. Others are falling flat on their face. Wall Street saw massive swings across major stock indexes today. The S&P 500 gained 1.3%. The Nasdaq jumped over 2%. Investors are reacting to big earnings and heavy economic news. 10 major stocks made massive moves today. You need to know what caused these giant swings. The big tech divide. Let's start with the absolute biggest winner of the day. Microsoft stock surged more than 16% today. That marks its strongest single-day move in years. The company reported massive growth in its Azure cloud business. Cloud revenue jumped 43% year over year. Wall Street expected less than 40% growth. Chief Executive Satya Nadella proved artificial intelligence spending is paying off. Enterprise customers are buying AI tools at a rapid rate. Capital expenditure remains high for the tech giant, but revenue is growing faster than Wall Street expected. That gave investors complete confidence to buy heavily. On the flip side, Meta platforms suffered a brutal drop. Shares of Meta plummeted nearly 10% today. The social media giant missed Wall Street revenue expectations. Their guidance for next quarter also came in weak. Mark Zuckerberg is spending aggressively on artificial intelligence infrastructure. However, short-term ad revenues failed to match that spend. Investors rewarded Microsoft for clear earnings conversion. They punished Meta for rising expenses and lower guidance. This shows a huge split in big tech performance. Spending money on AI is no longer enough alone. Wall Street demands immediate revenue proof from these giants. This divergence creates specific opportunities for active traders. Focus on companies with accelerating cloud revenue. Avoid companies with ballooning costs and slowing growth guidance. Earnings season exposes real fundamentals very quickly. Watch options pricing before major tech earnings releases. Implied volatility can swing prices dramatically overnight. Always manage your downside risk with strict stop losses. The semiconductor fire rally. Computer chip stocks roared back to life today. Semiconductor companies suffered heavy losses earlier this week. Today, buyers rushed back into the chip sector. Lam Research surged over 17% today. The semiconductor equipment maker beat profit and revenue expectations. Demand for advanced chip manufacturing tools remains exceptionally strong. Lam Research sits at the top of the supply chain. When chip makers build new factories, they order from Lam. Advanced Micro Devices also had a massive session. Shares of AMD jumped over 13% today. Their second quarter earnings beat Wall Street estimates easily. AMD's data center segment expanded at a record pace. Management officially raised full-year revenue guidance for AI chips. Analysts immediately raised price targets across the board. AMD is successfully capturing market share in enterprise hardware. Micron technology gained 16% in trading today. Memory chips are essential for high-performance AI servers. Wall Street worried memory chip prices had peaked recently. Microsoft's massive spending report quickly proved those worries wrong. Hyperscale data centers require endless memory capacity right now. Micron stock snapped back after a steep multi-day sell-off. Semiconductor stocks move as a unified group during earnings season. One strong earnings report can lift the whole sector. Traders should track supply chain relationships closely. When equipment suppliers post strong results, chip makers usually follow. Watch volume spikes on technical breakout levels. High volume confirms real institutional buying power in chips. Consumer winners and losers. Consumer-focused stocks delivered huge surprises during today's session. Starbucks stock rallied over 6% today. The coffee titan reported earnings that topped analyst expectations. Management raised full-year profit guidance for investors. Store efficiency improvements are boosting operating margins globally. Traffic numbers stabilized despite tough macroeconomic conditions. Investors welcomed the optimistic operational outlook with aggressive buying. On the negative side, Carvana plummeted nearly 11%. The online used car retailer delivered disappointing future guidance. Full-year profit targets came in below Wall Street estimates. High interest rates continue to pressure used car buyers. Financed vehicle purchases face heavy headwinds from elevated borrowing costs. Carvana stock reacted instantly with a sharp sell-off. Today's economic data explains why consumer stocks are splitting. The official second quarter gross domestic product report was released today. U.S. economic growth slowed to an annual rate of 1.5%. Economists expected growth closer to 2.1%. Economic expansion is clearly cooling across the country. Consumers are becoming far more selective with discretionary spending. High daily living costs are squeezing middle-class households. Companies offering affordable daily luxuries like coffee can hold market share. Companies selling large financed items like cars face big hurdles. Look at debt loads when evaluating consumer stocks today. Higher interest rates make heavy corporate debt very expensive to service. Choose companies with strong cash flow and low debt exposure. High volatility tech and biotech stocks. If you want daily updates on market movers, hit that subscribe button right now. We release fresh breakdowns every day to help you trade smarter. Now let's look at cybersecurity giant Fortinet. Fortinet stock surged 11% in early trading today. The company crushed both revenue and profit estimates handily. Enterprise spending on network security remains top priority worldwide. Billings grew faster than analysts projected for the quarter. Cyber threats are rising rapidly across corporate networks. Companies cannot afford to cut their security budgets right now. Fortinet is capitalizing on that non-negotiable enterprise demand. Healthcare and biotech stocks saw extreme downside price action. Teladoc Health crashed more than 27% today. The telehealth provider posted another weak quarterly performance update. User growth numbers stalled across key market segments. Competition in virtual care services is intensifying rapidly. Teladoc has struggled to achieve consistent profit margins post-pandemic. Investors dumped shares in high trading volumes today. Alnylam Pharmaceuticals experienced an even worse decline today. Shares plunged nearly 30% in trading today. The biotech company suffered a massive sell-off after clinical updates. Earnings metrics disappointed Wall Street expectations significantly. Biotech stocks carry massive risk around earnings and clinical results. Single news events can wipe out months of stock gains instantly. Trading high volatility stocks requires strict risk management parameters. Never allocate more than 2% per biotech trade. Diversify across multiple sectors to protect your trading capital. Software and security stocks offer cleaner cash flows than speculative biotech. Position size correctly before binary earnings announcements happen. Federal Reserve policy and market strategy. To trade successfully, you must understand macro conditions right now. The Federal Reserve concluded its policy meeting yesterday afternoon. Chairman Kevin Warsh held interest rates steady at 3.5 to 3.75%. However, 3 Fed members dissented from the decision. They voted for an immediate quarter-point rate hike instead. A 9-3 vote split signals growing disagreement at the Fed. Inflation readings remain stubbornly high above the Fed's 2% target. Oil prices swung wildly this week due to Middle East tensions. Brent crude hovered near $87 per barrel today. Higher energy prices keep inflation pressures hot across the entire economy. Meanwhile, 10-year Treasury yields remained elevated near 4.66%. 30-year yields hovered near 5.2%. Higher yields pull liquidity directly away from risk assets like stocks. This creates a complicated economic backdrop for retail traders. Economic growth is slowing down to 1.5%. Inflation remains persistent across core services and energy. The Fed will not cut rates quickly under these conditions. That means stock selection matters more than ever before. Rising tide markets lifting all boats are officially over. Focus your capital on proven market leaders showing real profit growth. Companies like Microsoft and AMD prove demand is real. Avoid unprofitable speculative stocks facing high interest rate pressures. Keep cash ready for market pullbacks on high-quality names. Watch the daily personal consumption expenditures inflation data carefully tomorrow. Market volatility will remain high as earnings season continues. Look out for our next video posted daily to stay ahead of Wall Street.